You've had this moment. You decided today was the day. You were finally going to figure out this investing thing. You opened an app, typed something in, and closed it. Not because you don't care, because there are suddenly 100 options and zero clarity. Stocks, ETFs, index funds, crypto, Roth, IRA. Every answer leads to 5 more questions. And at some point, your brain just makes a decision for you. I'll figure this out later. But here's what nobody tells you. That moment right there is the most expensive decision you will ever make. Not a bad trade, not the wrong stock, just waiting. In this video, we are going to do something most finance content never actually does. We are going to break down exactly where a complete beginner should start, not with a specific platform, not with a stock tip, but with the 4 categories every investor needs to understand. The first move framework that gets you in before you feel ready, and the mindset shift that separates people who talk about investing from people who are already doing it. By the end of this video, you are not going to feel overwhelmed. You are going to feel like someone who finally has a clear enough picture to take a first step. And that first step changes everything. So let's talk about what's actually happening when you freeze. Because it's not that you don't understand money. You understand money fine. You know how to budget. You know how to be responsible. The freeze happens because investing feels like the opposite of everything that made you responsible in the first place. Saving feels safe. Investing feels like risk. Saving feels like control. Investing feels like handing your money to something you don't fully understand. And until that feeling shifts, no amount of information is going to move you. So before we talk about where to put your money, we need to talk about how you're thinking about it right now. Ask yourself this: why does investing feel scary? Most people answer, because I could lose money, and that's real. But dig a little deeper, and what you actually find is this: you're not afraid of investing. You're afraid of losing the money you work to preserve. You're afraid of going backwards, and that fear makes complete sense. But here's what changes when you reframe it. Investing, done simply, is not the opposite of preserving money. It's the next level of it. You're not gambling. You're participating in growth over time. And the difference between someone who builds wealth and someone who doesn't usually isn't knowledge. It's that one person started before they felt ready. So let's talk about the 4 categories, because right now, stocks, ETFs, index funds, and crypto probably all feel like the same level of confusing. They're not. And once you see the actual difference, the decision gets significantly simpler. First, individual stocks. You're buying a piece of one specific company, higher potential return, higher risk, requires more research. Second, ETFs or exchange-traded funds. You're buying a basket of multiple companies in one purchase, more diversified, less volatile, still completely accessible to beginners. Third, index funds. The simplest version of broad market investing. You're tracking the overall market or a major segment of it. Low cost, wide exposure, one of the most consistent long-term options for everyday people. Fourth, crypto. It exists. Some people include it, but it lives in the speculation category, not a foundation, a small corner if you choose it at all. Now here's where most people get stuck again. They hear those 4 categories and they think, okay, great, so which one do I pick? And that question sounds right, but it's actually the wrong question, because the real answer isn't one or the other. The real answer is a combination, and that combination is called diversification. And here's why it matters more than most beginners realize. When one thing drops, something else holds. When one sector struggles, the rest of your portfolio keeps moving. You're not betting on one outcome. You're building something that can survive multiple outcomes at the same time. And you can start doing that with as little as $10. But before that, let's be honest about something. Most people watching this video right now are going to finish it, feel clear, feel motivated, and still not open an account today. Not because the information isn't there, because there's a pattern that almost every beginner falls into: research mode. You watch videos, you read articles, you save posts, you feel like you're making progress because you're learning, but learning without acting is just expensive entertainment. Every week you stay in research mode without a dollar in the market is a week of compounding you will never get back. And the people who started with $10 and incomplete knowledge 3 years ago, they are not behind you. They are years ahead. So here's what actually breaks that pattern. It's not finding the perfect platform. It's not understanding everything first. It's lowering the starting requirement so small that your brain can't argue with it. $10, that's it. Not because $10 is going to make you wealthy, because $10 gets you inside. And once you're inside, everything changes. You start reading differently. You start paying attention to things you scrolled past before. You start building the identity of someone who is already invested, not someone who is planning to invest someday. And that identity compounds just like the money does. Here is the first move framework broken into 5 steps. Step 1, spend 1 week tracking before you invest. Download a free app. Watch charts. Get comfortable with how markets move before your money is in it. Step 2, start with what you genuinely will not miss. $10, $20. The amount does not matter yet. The habit does. Step 3, split it immediately. Never put everything in one place. A piece in an index fund, a piece in an ETF, maybe a small piece in an individual stock you want to learn from. Diversification from day 1. Step 4, automate a percentage of every paycheck. Set it once. Let it move before you can think about it. The funnel runs whether you're motivated that day or not. Step 5, research your own platform. The right app and account type for your situation is personal. It depends on where you live, what you earn, your goals. That research is yours to do, and doing it is part of becoming someone who actually understands their money. Most people think they need to find a financial advisor or take a course, but the people who actually figure this out, they build their own algorithm. They find the creators who explain things in a way that clicks for them. They save the content that makes things simpler. They ask better questions until the answers get clearer. That process, the searching, the filtering, the building of your own understanding, that is the financial education. Because here is what happens once you start. Week 1, it feels weird. Week 2, you check the app out of curiosity. Month 2, you're reading things you never would have clicked before because now you have skin in the game. Month 3, you don't think of yourself as someone who is saving up to invest someday. You think of yourself as someone who is already in it. And that identity, investor, participant, owner, changes how you respond to your next paycheck, how you think about a raise, how you react when you hear someone mention the market. You went from watching from the outside to being inside, and you did it with $10 and zero expertise. Now here's something interesting. Most people who do everything in this video, they open the account, they put the money in, they set the automation, and then they hit something nobody warned them about. Not a market crash, not a bad trade, something quieter than that. Something that shows up the first time the number goes down even slightly. And it's the real reason most beginners pull their money out too early and never build anything. In the next video, we're going to talk about exactly what that is, and the one mental shift that makes it almost impossible to panic. If this video made something click for you, the next one is the piece that makes it stick.